First, make
Start. Hello, good afternoon. Am I audible and visible?
Yes, yes, ma'am. We can.
Oh,
Right. So we're just starting the session, ma'am. Now. Good evening and warm welcome to all the members who just joined the session. And I respectfully thanks to all of you and that warm welcome to the today's session. In this session webinar, what we are going to discuss is related to the Union Budget 2024, the critical changes. We will have the detailed discussions on the budget and we will see what are the impacts and implications of the same on the NRIs. So that's the key focus of our session today. Please confirm in the chat if I am audible.
audible.
So today's seminar, we have been doing it with the joint seminar with the Jeddah chapter. So both central region and the western regions are handling this seminar as a jointly. And in addition, the other GCC chapters has also extended their support and has been circulated to the other members in the group, be it Bahrain, Doha chapter, Oman, the Khobar ICAI chapter. So all those chapters are joining. So I would like to introduce the today's session, what we are covering. As I just mentioned that it is related to the income tax changes and through the union budget and how it has been made in changes to the NRIs, its major impact. So I would like to welcome our distinguished guest today, the guest of honor, Mrs. Manu Samriti. She is head of economic commerce wing in the Saudi Embassy of the Riyadh, in the India Embassy of the Riyadh. And we will be having Dr. Girish Ahuja with us. He is the senior, as you all know, that he's a senior tax guru, and he will be joining us and taking us through the all changes. And he will be assisted with or being the co-speaker and taking the Mr. Avinash Gupta. He's a partner in the APT Global. And we will be having the detailed discussion and introduction of the all speakers respectively throughout the session. And I'm also joined with the CA Vijay Soniji from the Jeddah chapter. And he will be assisting us in taking us through in some of the significant expectations around that. So with this, without wasting the time much with the significant due, I would like call Mr. Vijay Soniji to put his welcome note remarks so that we can initiate the session accordingly.
Good afternoon, esteemed guest of the day, Manu Smriti ji, Ahuja ji, Gupta ji, and my friend Naveen. Of course, there is a vibrant community of my professional colleagues from Saudi who has come just from their offices, or either maybe some of them are still in office and spending time with us to unease some of the provisions of Union Budget 2024. Friends, why this budget is so important for all of us? As soon as budget speech is started, in few minutes we see this a bloodbath in stock market, around 1400 points, and within by the time day gets over, we see it's coming back to the normal level. It all goes by expectation of what's happening and how it's going to affect my life, investor life, business people life. I think this budget is full of twinkling, whether you talk about tax provisions or some development projects which are coming in an economy. One side, you have something good news for investor as well as individual to cheer off, whereas there are certain genuine concerns which are making this more important for all of us to unease those provisions and look for that one. Best part, this is the seventh budget presented by your Honorable Finance Minister. And good part is, since it is continuity going on, the policy initiatives are in line with what has been started in beginning and what was presented in interim budget earlier this year. One thing which has been focused in this budget, which is more favorite to me, is employment concern. So you can see a lot of provisions has been included in budget, whereby they're talking about almost 1 crore youth will be benefited by internship program with big 500 companies, whereby government is going to support those expenditure. Only 10% has to be borne by corporates. This will definitely a welcome step. It will give hands-on experience to youth. They may become either employees or they may become entrepreneurs in future. Very good initiative. Of course, there are few more initiative has been taken in this budget. One of the more talked about was 15,000 crore to Andhra and 26,000 crore to Bihar. And it was a talk of street. I will not go to this political aspect of those allocations, but definitely those state needs a push to bring better infrastructure, school, colleges, and those projects are implemented. Definitely, it will be a big push for economy and employment generation, which is need of our. One more point I just want to figure out from these announcements are FDIs. You know this all over world, what's happening. You know, people are trying to boycott Chinese product and looking for alternates. And government is trying to take its opportunity, and this time they are welcoming Chinese FDIs. So we may see a lot of Chinese companies are coming in India with Chinese investments, and manufacturing happens in India. Definitely we can take a pie in exports. So again, it's initiative which is going to help you to generate employment and gain this opportunity. Friends, one of the things I just want to touch upon is, what people look from budget, as a common man. We normally we look at, people are all concerned, what are the tax provisions. But I say, no, apart from tax provision, it's a policy document which talks about how next 1 year and future government policies are going to work around, so that you can align your investment or you can do planning based on that, so that you can protect your investment as well as you can grow much better way. It could be investment in money terms as well. If you want to look for happy life, yes, of course, all aspects are derived from the budget. First, I'm not going nitty-gritty of each tax provisions because we have a lot of eminent speakers among today. So I will not touch those things. Just I'm trying to highlight some of things which are maybe, some are written, some are not written, which we have felt it. So it's better to influence it. Another provision which is talking of simplification, 3 years time limit for reassessment of cases. It will definitely reduce litigations and fear among taxpayers. You open up a case after 5 years, 6 years, and who remembers those issues? At least 3 years is good enough period. The harassment issue goes down. People more encouraged to file returns. Biggest concern what has been, troubling all of us is, apart from, if you see these tax provisions where, say, a personal taxation, if you say there is no much difference. Basically, they tweaked some of the tax brackets from 3 lakhs up to 3 lakhs. There is no tax, and 3 to 7 lakhs, 5%, and 7 to 10, 10%, then 10 to 12, 15, and 20, and 30% total brackets they have defined. There is not much difference from past, apart from a small saving and few more provisions, like they increase standard deduction to 75,000. One thing, which I would have appreciated if they have touched upon this peak rate, which is right now is 30%. Actually, effective rate is not 30%. If you add surcharges and cess, it goes to around 41%, which is quite high. If government thinks about it, definitely we can stop reverse migration of HNIs, which we can see, we all of us know some of guys try to, I'm talking very HNI, we are moving out their funds outside. That can be stopped this way. One more initiative which I liked is basically IFSC, Gift City. Gift City already they expanded to 3,000 acres, whereby half portion is free zone and certain part is normal land. But beauty is this: people are parking money in Mauritius and other tax havens. So we are saying, there is country within a country. You are in India, but you have all those benefits, what you are enjoying there. And let's talk about most beautiful thing is IFSC is basically autonomous body they created where it is having all regulations controlled by them. You need not to talk to FEMA separately, RBI separately, and other regulations. And most of things what they're talking about is free zone like structure. I think probably we will require one more session because it's very interesting, especially for NRIs. If I want to invest directly in stocks in India, or should I invest through IFSC center? What tax gain today I can have, what I can have in future. So there are many things to be drilled down. Probably this is not right forum to discuss. It requires hours of discussion, but just wanted to highlight this subject. Friends, there are multiple provisions. I have been given very limited time to speak about because mainly I want to allow more time to esteemed speakers to talk. And if something left over, yes, I can join it later part. But one thing I just want to raise it. We are NRIs. Most of our audience today are either employed or business people working in Saudi. What we expect? We basically looking is this budget, how it affects my investment, how it affects my current earning, and future when I want to move back to my motherland for good, how I should plan it out. Today, when we are hearing this capital gain tax indexation benefit has been removed, people are putting money in gold. Gold, yeah, welcome step is they have reduced custom duty to 6%. It's a very welcome step. It's going to allow more value addition from India. Jewelry market will more flourish. At the same time, smuggling will come down. But what about if you are putting this capital gain tax of 12.5% for long term and no indexation? This may, I think, probably it will lead to more cash economy. And probably this provision will still go for debate and changeover will happen. So everybody who are concerned, I am hopeful that there will be relaxation in this provision. If not, definitely it is going to affect a big way and require a lot of planning. Probably Avijaji will be guiding it more better way. And we will like to hear that if I retire from here, how should I plan it out? There are many queries on this subject from my NRI friends. One of the query, again, people are talking about, should I file return in India or not? I get so many queries, income tax notice comes. I have nothing to do, but I get in. I say, don't worry, you got a computer generated query, you reply it, you have legitimate source of income and get closed. But people get nervous, they say, should I file return or not? Should I disclose my foreign income? People say, oh, your foreign income, they just convert in Indian rupees high. So they're concerned. I told, no, don't worry. You need not to disclose your overseas income as well as you are living here. One more point, I think probably Avijaj will touch upon is 60 days rule, which has been bothering many of NRIs. They say, oh, I'm here more than 60 days. They will consider me non-resident Indian and the whole overseas income also become taxable. I told there is exemption. If you are coming for employment purpose, that rule doesn't apply to you. I just want to say, there are some tax provisions nitty-gritty, but apart from tax provisions, there are huge allocation for infrastructure development and easiness of doing business, removing certain issues what people were worried about. Those things will definitely pave a good atmosphere for business community as well as NRIs. With that, I will rest myself and I would like to hear esteemed speakers along this evening. Thank you.
Thank you, Vijayji. Your wisdom words, and that truly reflects of your experience while you were working and joining the bilateral trade and so many delegations which you have attended, your experience, your professional experience, and your current practice, being in CFO and handling that member of IMA Western Province and handling the General Secretary, the SIVN. So that helps every member over here. And with this, I would like to announce that we have been joined by the Central Council member, Mr. Sanjay Agarwal. And if we can have just 2 minutes of word of wisdom from Mr. Sanjay Agarwal, please.
Right now on the screen, I am representing Dr. Girish Ahuja because there are some glitches for taking him to your webinar. And I congratulate the leaders of Qatar, Doha, and Jeddah chapter. And also, I am thankful to Avinash Gupta for arranging this particular webinar on the budget. I'm just wondering that the friends in overseas, they are worried about the Indian budget. So this is something to listen, that if the tax-free regimes are also worried, so it means they are thinking of coming to their motherland sometime in their life. And that is something you can say is really great for us, that we take care for so much for the motherland. Friends, I'm just saying that this is the first webinar, I think, with the overseas chapter. Normally, they are taken on 4th or 5th day because the speaker comes in the overseas chapter little late. But I can assure you that half of the way Dr. Girish Ahuja is coming and half of the way I am going, so that we can reach a proper time and I can give Dr. Girish Ahuja as fast as possible to you. Just continue to log in as Dr. Girish Ahuja. Please enjoy with your other speakers. Meanwhile, we reach in 15-20 minutes with Dr. Girish Ahuja. Thank you very much for giving me this opportunity. And leaders of our overseas chapters are doing the exemplary jobs of representing the profession in the overseas world. Thank you very much.
Thank you, Sanjay Agarwal ji. Now, I would like to introduce our honor of the guest today, Mrs. Manu Samriti. Mrs. Manu Samriti, she is heading the Economic and Commerce Wing of Embassy in India, Riyadh. And she has joined Riyadh Embassy of India in 2023, September 2023. Before that, she was there in that US, Cairo, as well as in the Dhaka. She has an experience of over 13 years in the experience of the public services, including his tenure with the Ministry of Economic Affairs in India. She is a Master in History and International Relations from the London School of Economics and Political Science, and she has done her graduation from the St. Stephen College. And now I would like and invite Mrs. Manu Samriti to put her word of wisdom to the audiences. Mrs. Manu Samriti.
Yeah, namaskar, good evening. Am I audible?
Yes, ma'am.
Okay. Namaskar, good evening from Riyadh. The leadership of the Riyadh and Jeddah chapter of the Institute of Chartered Accountants of India, members of the Indian diaspora in the region and in the kingdom. I would like to begin by first commending the Riyadh and Jeddah chapter of ICAI for organizing this initiative, this timely initiative, I would say, because all of us have been waiting in anticipation to see what budget 24-25 would unfold, especially because it was an election year and there was a lot of anticipation about what the third term of government would offer. And on a lighter note, I would say that it is very good to see such a robust community of chartered accountants in the region. And, we have newfound respect for CAs because as we struggle with our own personal income taxation issues, it's really the CA who comes to our rescue. So, of course, that was on a lighter note. But coming back to the big picture, the macro fundamentals of the Indian economy are strong. A few weeks ago, the IMF projected that growth would continue at the rate of 6.8% for the Indian economy, its highest in globally. Our own projections are also close, 6.5 to 6.7%. And as Honorable Finance Minister highlighted during her budget speech in the Parliament earlier this week, there has been global recovery, but at the same time, there are a number of uncertainties, whether it is in the form of, shipping, disruption of shipping lines, or, political as well as policy uncertainties at the global level. Therefore, the focus from our perspective, from the government's perspective, has been to continue our sort of policy initiatives towards a Viksit Bharat. There's a confidence about, India's growth story. And we have seen some successes over the course of the last decade or so, especially, in recent years in terms of whether it is taking advantage of the manufacturing opportunities which have opened up as companies seek China plus one strategy, whether it is in the area of electronics manufacturing, or it is in the area of defense manufacturing, where our leadership has had a very strong emphasis on make in India in the defense sector. And we see that these trends will continue over the next few years. If I come to the main budget, of course, there will be a more detailed discussion, especially from the taxation perspective. And we're all looking forward to Dr. Girish Ahuja's remarks. But I think what everyone has noticed, and it was also pointed out earlier in the remarks, was, there's a very strong emphasis on job growth and employment. And skilling, especially initiatives that bring in apprenticeship for youth and employment for women. There is a strong focus on technology, to develop an innovation and R&D ecosystem in the country. The allocation on infrastructure, continues the focus. We have seen the remarkable transformation which has happened in terms of roads, highways, networks in India in the last few years, and there is a strong emphasis on that. There is focus on energy security as well as our transition, green transition, towards which is a high priority for the government. Of course, enhancing agricultural productivity as well as sustainability is a continuing priority in this budget. And at the same time, improving the ease of doing business, the ease of innovation, continuing with the next generation of reforms to bring in more foreign investment in the country. These are all priorities. We have seen some simplification of rules of FDI, and some emphasis on nudging FDI in specific sectors. And as I mentioned, we will have a more detailed discussion. But I just wanted to say a few words about India-Saudi relationship before I conclude. Of course, in the recent years, our bilateral relationship has really transformed, especially with the visit of the Honorable Prime Minister to the kingdom in 2019, when both governments decided to elevate it to a strategic partnership. So at the government-to-government level, we have something called the Strategic Partnership Council, which is headed by the Prime Minister and His Royal Highness, the Crown Prince from the kingdom side. And we all witnessed the historic visit of His Royal Highness, the Crown Prince, to India in September to attend the G20. And, a lot of focus of the bilateral relationship is on the economic side. We get information from the Ministry of Investment in Saudi Arabia, which indicates that there are more than 3,000 Indian companies which have a presence in the kingdom. And they have invested over $3 billion, in various sectors, whether it is engineering or technology or data centers. It's a very remarkable number. And every day we get a lot of interest from, Indian businesses who are coming to the kingdom to explore opportunities and be part of the kingdom's Vision 2030 and the reforms that they are undertaking to encourage foreign companies to come. And we rely on the strong support of community members, diaspora members, to help our businesses from India navigate some of the local regulatory complexities and understand. And we look upon ICAI, the local chapters here, as a source of support, and we hope that we can work together to help our Indian businesses. And, before I conclude, I would also say a bit about the bilateral trade, because, of course, the bulk of the trade is in one direction because of our energy imports from Saudi Arabia. But India's exports, and in the last few years, we have seen a very strong, focused export led growth strategy. We reached the target of $400 billion. Now we have very ambitious targets of global trade of $1 trillion. With Saudi Arabia as well, for the last 5 years or so, we have seen on a year-on-year basis positive growth in India's exports. And from our perspective, our objective is to diversify our exports to the kingdom. And we see tremendous interest from Indian, exporters in exploring opportunities in the kingdom, and large-scale participation in the various exhibitions and events which are being organized in the kingdom. From the government's perspective, from India's perspective, we would like to see more Saudi investments flow to India, especially because we see that there are more foreign institutional investors, other foreign governments, which are taking advantage of the India opportunity. And the India opportunity will continue to remain strong for the next 2 decades. So we hear that there is interest, but, we don't see as much in terms of outcomes. So, from that perspective, I would request members of this community to, to be like Indian, ambassadors in that regard, to share the India story, to highlight the investment opportunities, to demonstrate to our Saudi colleagues and friends, the benefits that lie of, investing in the Indian market. And, everyone talks about it, and we have seen more and more foreign investors entering the market, and also to encourage more Saudi friends to travel, to India to see it firsthand. So with these remarks, I wish this program a great success, and I look forward to hearing more information about, the details and nitty-gritties of the changes in the taxation regime under the new budget. Thank you.
Thanks, Mrs. Manusmriti, for your kind words and your words regarding the Indian policies and the budget announcement and the initiatives which has been taken by the Saudi and the bilateral treaties from the embassy. And I would like to highlight one of your special connection with the ICAI chapter, because I remember while you were in previously in the Washington, DC, you worked very closely with that ICAI chapters. And the same we are experiencing it with you under your leadership. I'm sure that more of that opportunities will come together, and I can say on behalf of the all CA chapters over here, we'll be working more and more closely with the embassy, and we will be there available as much as we can. Just look into the factor which you mentioned, and on the parallelly we would look forward from support from the embassy wherever we need any such matters where we can get along with you guys. And thank you for your kind words. So now taking forward, so Dr. Girish Ahuja will join us in a couple of minutes. So now I would like to introduce Mr. Avinash Gupta. CA Avinash Gupta, he's a chartered accountant from India, and he was the rank holder in the merit list of the CA final. Along with his chartered accountancy, he has done his LLB and LLM from Vienna University, Austria, that too especially in the international taxation. Avinash has authored 3 books, which is including the UAE taxation corporate laws, and he's already pursuing his PhD course, and a few more books are yet to be announced. So I just keep that on hold unless those has been announced, and there will be soon certain publication on the Saudi taxation laws as well. And as Avinash was the Northern Regional Council chairman for ICAI in the term of 2022, and he is currently serving as a secretary to the SRCC Alumni Association. And he's a prominent speaker, and he's already given more than 3,000 lectures in the international as well as that in the India. So without further ado, by the time Dr. Girish Ahuja comes and joins us, I would request CA Avinash Gupta to give the brief glimpse about the significant changes which further can be taken by Dr. Girish Ahuja. Over to you, Avinash.
Thank you, Naveen-ji. Thank you to Riyadh chapter of ICAI and the Jeddah chapter of ICAI It was nice start by Vijay Soni ji from the Jeddah chapter, and Madam Manusmriti ji have spoken really well on the overall export and imports of the country. But Madam, I can tell you one thing, that you will be benefited by this budget by to the extent of 17,500 rupees. So on your income, whatever you are getting from Government of India, so now you have to pay less tax for the current year to the extent of 17,500. So that is a relief what have been announced. So Vijay ji is laughing and smiling on this. Sir, for an Indian person in India, it is a big relief that is there, believe me. So I think what you have asked, 2 or 3 things. So let me touch that first, because you started with this. And then there is one very big concern which have been there in many people relating to that income tax clearance certificate, which is being published today in the Hindustan Times and Economic Times as well. So I will touch upon that also. So, sir, first, though it is not related to the amendment in the union budget, but still, I think you have asked. I think this is a very important question about every NRI who is outside India, to say whether he is required to file return or he is not required to file return. So I think, sir, to answer this question, the law is very clear. The law says if any individual, if he have any taxable income in India, and that limit is beyond the amount which is not chargeable to tax, means beyond 3 lakh rupees. So if any person have any income which is beyond 3 lakh rupees, then he is under an obligation to file return of income. Then there is one more provision which says that there are certain transactions. So for example, that NRI have a house in India and that house have an electricity meter in his name, and the amount of bill that is coming for that electricity is exceeding 1,20,000 in a year. If you have a credit card from India and from that credit card he is having certain transaction and the bill is exceeding certain limits which have been prescribed, then also he is required to file return of income. I personally believe that every NRI who is working abroad should file return of income in India, because these NRIs have a lot of money in their NRE accounts. They have a lot of money in their NRO account which is being deposited. And I have seen and witnessed myself, because I'm closely working and detailing with the NRIs abroad. Most of the NRI people are earning outside India and putting this money in their NRE account, NRO account, and I'm sure you also have done it, or Naveen ji must have done it. So with that money coming to India, putting in the FDs or anywhere, then if you have income, then you should declare. Yes, any interest that you have received on your NRE deposits, that is tax-free in India, are not subject to pay any tax on your NRE deposits. But if you have any money in your NRO account, all are subject to tax. If any NRI have invested in the stock markets, in mutual funds or whatever it is, then it is taxable. However, there may be a benefit which have been provided between the tax treaty, double tax avoidance agreement between India and those countries, might be Saudi Arabia, might be UAE, might be Qatar. So whatever agreements that we have signed as a country, so one can take benefits. So for example, if you invest in a mutual fund, the agreement between India and UAE says that those mutual funds are tax-free in India. As an NRI, if you invest and earn income, it is tax-free. I think the Saudi also have the same clause. When a person like Naveen ji, who is a resident of Saudi Arabia, tax resident of Saudi Arabia, earns income on their mutual fund, that is not subject to tax in India. So those benefits can be taken. But as per legal provision is concerned, then one can check whether they have a taxable income in India exceeding 3 lakh rupees or not. If they have more than 3 lakh rupees per annum, then they need to file that return of income in India. Now, next question that you have raised about the 60-day rule. So, sir, 60-day rule is yes, under my Income Tax Act in India, we have a rule that if the person is staying in India for more than 182 days, he is deemed to be resident in India. But if the person is there for less than 182 days, then he is not regarded as resident. But we have second set of rule which says that if the person stays in India for more than 60 days and more than 365 days in the preceding 4 years, then also he is deemed to be resident in India. However, this rule is not applicable in case the person is staying out of India and earning salary income, or if the person is doing his own business. Employment includes self-employment. That is, we have a settled position here. So I believe, Soni sir, if you are staying abroad, either on an employment visa, you are doing an employment, or you are doing a business, in both the cases, that 60 days condition is not applicable to you. So that's why you may not be worried about that 60 days condition. There is a third condition also which have been prescribed 4 years ago, is 120 days. So their 120 days condition is that if the person is in India, stays in India for more than 120 days, and his total income, which is chargeable to tax in India, exceeds 15 lakh rupees, then also this person is deemed to be resident and not only resident in India. So that condition also you need to fulfill. Forget about all three, sir. Now let us talk about our new provision which is available in the treaty between India and Saudi Arabia, treaty between India and UAE, treaty between India and Qatar, which simply says if you are staying in one country for 182 days or more, then none of these three provisions are applicable. So if you are in Saudi Arabia for more than 182 days, then forget about 60 days, forget about 120 days, forget about all other provision of 15 lakhs, etc. Then you can simply claim the benefit of the treaty between India and Saudi Arabia, India and UAE, etc., etc. So those provisions are there for the benefit of the NRIs, for the benefit of all the residents of this country. Our government have done a fantastic job, and they have already signed these treaties to promote business, to promote trade, and to reduce the burden of double taxation in those countries, on the businesses as well as on the persons. So I'm talking about both ways. Now, sir, there are two good amendments which have been there, and Manusmriti ma'am, I want you to highlight those amendments to the people, to the businesses of Saudi Arabia, which the government of India have brought in this budget. The first amendment is with respect to the rate of tax for non-foreign companies. So if any foreign company, any Saudi company, if they are working in India, they are earning any income in India. So earlier they are required to pay a tax at the rate of 40% in India. If they are operating as a branch offices, they are operating as a permanent establishments in India, likewise. Now this 40% rate have been reduced to 35%. So all foreign companies who are working in India or earning income from India, which is liable to be taxed earlier as a PE income or a branch office income at 40%, now this has been changed to 35%, which is enormously benefited the foreign companies, like all the banks who are working in India, all HSBC, Standard Chartered, or Emirates NBD, or any other bank, maybe Fab Bank is First Abu Dhabi Bank. All these banks, when they are working in India, they all work as a branch offices, and these branch offices earlier are subject to tax at the rate of 40%. That rate have been reduced. Their rate have been reduced to 35% on their net income. That is there. Apart from that, as an individual NRI, now if I have an income of 15 lakh or more and I am opting for a new regime, that new regime is being promoted by the government, by the income tax department, and with that new regime, there is a change of the slab rate in two bases, and there is a benefit which have been extended for 10,000 rupees. Up to 10,000 rupees have been extended for the person who have an income up to 15 lakhs or more than 15 lakhs. So that 10,000 benefit is being given to the assessees that is there. The third thing what government have done as far as the foreigners are concerned or foreign residents are concerned, so what they have said is if there is a foreign company who is involved in the business of cruise, so any company who is running a cruise business, now these companies have been given a special benefit in India, and these companies are welcomed in the India, and they have been called that, okay, you start doing cruise services in a domestic territory of India. And now they said that what we will do is we'll give you a presumptive rate. So we are not concerned about how much is your income, 20% of the gross receipt. So whatever you receive from the people, from the customer, 20% is deemed to be the income. On this 20%, 35% will be the tax. So meaning thereby they end up paying only 7% tax on their gross receipt. So whatever they receive, they are required to pay only 7% tax on it. Plus, if the cruise is not owned by this company, but cruise is owned by another company of the group, and they pay lease rent for the cruise, for the ship that they use. So even that lease rent, what they pay to the other ship, other company of the group, even that lease rent income is also deemed to be exempt. So there will be no tax to be given, no tax is to be paid on the lease rental paid by this company. So that benefit is also been extended for cruise companies. So I don't know whether Saudi Arabia have cruise companies and who do cruise holiday packages, etc. But if there is any, then they can be benefited with this provision which they have introduced in India. Within their income tax. So that is a huge benefit which have been given to the foreign companies and foreign nationals. Now, let me come to next thing. What is there in the newspapers today regarding the income tax clearance certificate. So let me tell you what exactly was printed and what is the case. So in India, we have a system of income tax clearance certificate to be obtained from the income tax department by any person who is domiciled in India. So everybody who is going out of India is under an obligation to obtain an income tax clearance certificate from the income tax department if he is going out of India. Then this provision was relaxed for all Indian nationals who are going out of India, either for the purpose of tourism or for the purpose of any business, anything, provided they are regularly filing their return of income or they are having the PAN number. But yes, when an Indian citizen is renouncing his citizenship, when he is taking the citizenship of another country, or a foreign national who is working in India, who is leaving India permanently. So a German person, a US citizen, a British citizen who is working in India for 1 year, 2 years, 5 years, and now he is moving back to his country. So before he moves out of the country, on the immigration counter, he has been asked to show a tax clearance certificate that there is no tax liability in his name, or if there is any tax liability that have been paid, or there are sufficient proof that this will be paid. So normally Indian company where he is employed, he takes a declaration to income tax department that if there is any tax liability, that we will bear it. Based on those declarations, these ITCC have been given and granted to these people. Today in the newspaper, it has been mentioned in the paper that every Indian who is going out of India, whether for tourism or otherwise, is now required to obtain an ITCC. This is nowhere in the amendment or anywhere it was written. The amendment is not like that. So please don't be confused about this ITCC, income tax clearance certificate. The amendment is like that. Whenever the assessing officer or the income tax officer, whenever they are issuing these ITCC, income tax clearance certificates, he has to ensure that all the liabilities under Income Tax Act have already been paid. All the liability under Wealth Tax Act have been paid. All the liability under gift tax have been paid. All the liability under fringe benefit tax have been paid. But there is no mention about the liability under Black Money Act. And we all know from 2016 onwards, we have a huge law in India which talks about black money. And this is mainly applicable on all the residents of India who are having assets outside India. It is not applicable on NRIs. It is not applicable on non-resident. Yes, there are many residents in India who have foreign assets outside India, and those foreign assets are not being disclosed, or these foreign assets have been acquired out of undisclosed income, etc., etc. So under that also there are liability which have been created, and we have cases. We all know that we have cases like Nirav Modi, we have cases like Vijay Mallya, where government of India is trying to get hold of him and take them back to India. But there is a liability under the Black Money Act which is there. But for issuing ITCC, for issuing income tax clearance certificate, that liability was not mentioned. Now the amendment have been made in the Income Tax Act, and that amendment was proposed to include the liability under the Black Money Act also into this particular provision, where no ITCC, no income tax clearance certificate can be issued to the person unless the liability under the Black Money Act is also being paid or done by the or discharged by the person. So that is the amendment which has been proposed in the budget, but it was misinterpreted by Indian newspapers. And many NRIs have a worry that if they go back to India for holidays or something, while coming back, they are also asked to submit this ITC, this income tax clearance certificate. No, the answer that this is not like that. So don't worry about those particular things. So those things are not there. So that's why please be aware about this. Next, a welcome amendment which have been made in the Income Tax Act with respect to the startups and the money invested by many NRIs into Indian companies. Now, let me explain what is the provision and what they have changed. So many Indian companies are there who are doing startups, maybe eligible startup, non-eligible startup, but these companies are raising money and huge NRI investment is coming back to India. Even the foreign investment is also coming back to India, and they are buying the shares of the closely held companies or the startups in India. And there is a huge money which is coming. In 2012, the government have made a provision that any Indian company cannot issue shares at premium, which is more than the fair market value of the company. So many times what happens, the startup does not have a business, but they have customers, they have some idea. And on that day, the value of the company is zero. The value of the company is nothing. But the idea have a value. But in the Income Tax Act, this idea do not have a value. So if the 10 rupee share is issued at 10,000 rupees to the person, then what happens is the Income Tax Act says that, okay, the difference between 10,000 and 9,990 rupees is deemed to be the income of the Indian company. Initially, this tax is not there on the non-residents. So if the non-resident investor invests in Indian company, that tax is not there. But since 2023, last year, this tax have been introduced, and this tax was popularly known as angel tax. So that the government have put it on the share buying of the shares of the closely held companies. Now this angel tax have been abolished. Now, whenever any foreign fund, any foreign company, any NRI, any non-resident who invests into the shares of Indian company, that Indian company can issue shares at premium without treating it as income. Navinji, I think you are saying there are few members who want to ask questions, so I'm okay if they want to ask questions, we can take up their questions.
Yeah, so Mr. Abu Junaid, if you can unmute yourself.
Good evening to everyone. I am Girish Ahuja here.
Okay, sir.
Yes, sir. And
so you can ask question from Mr. Avinash Gupta, then I can barge into it.
Oh, sir, you please start, sir.
I don't know what I am supposed to talk. What have you talked about that?
But nothing. Only the angel tax and some other basic rate of tax. Nothing.
Let me tell you very important thing. Very good evening to everyone, no doubt. Let me tell you very important.
Capital gain I have not covered, so please.
Let me tell you everything that let me tell you, we had the earlier of a long-term capital gain. 3 different type of period was there. For listed share, other than unit of equity oriented fund, it was 12 months. For unlisted shares and immovable property, it was 24 months. And for all other assets, it was 36 months. Now from this year, assessment year 25-26, previous year 24-25, there will be only 2 types of capital asset. One, all listed securities, including debenture, 12 months. All other assets, maybe gold, maybe immovable property, maybe anything, it is going to be 24 months. That if you sell it after 24 months, it is long-term capital gain. If you sell it before 24 months, short-term capital gain. But in case of listed, if you sell it after 12 months, long-term, otherwise short-term. This was the first change which has taken place. As regard capital gain was concerned, in Indian market are going skyrocketing. You know, their prices are going so high and everybody has minted money. This was the right time to increase the rate of a tax in case of long-term capital gain from equity shares and short-term capital gain under 111A. So that 15% tax short-term capital gain has been raised to 20%. Because they know market can absorb it. And in the case of long-term capital gain, 10% has been raised to 12.5%. This is for listed share. But wait a minute. For all assets, for long-term capital asset, maybe gold, maybe immovable property, maybe anything, the tax rate from 20% has been brought down to 12.5%.
5%.
12.5%. Is there advantage or disadvantage? How can they reduce from 20 to 12.5%? Obviously, they have something in mind that indexation will not be allowed. Earlier, you buy before 2001, you can take market value 2001, and then there is an indexation from 100 to 363 today. But now, indexation will not be allowed. There are people who are going to be benefited. There are people who are going to lose money here. Many people will pay tax now less. Take a case of an unlisted company share. You are a promoter, you are a shareholder, you bought the share for 10 rupees. Now you want to transfer this share. 600, 800, 900, whatever is it. How much indexation of 10 rupees? Only 3.63 maximum. 3.63. And the balance capital gain was taxable at 20%. Now you buy the share for 10 rupees, sell it for 1,000 rupees, the capital gain will be only 12.5%. So the unlisted company stand to gain by transferring their share to others and charge more money and paid less tax. And person like me, who is at this age, who has bought property before 2001, at that time or during 2001, at that time, the property rate was very low in India. After COVID, it has gone multiple times. Now, suppose I had bought the property in 2001 for 5 lakh rupees. Just an example I'm taking. That 5 lakh was also good. 10 lakh, let us take it. Now, I want to sell it for 20 crore today. 10 lakh was indexed to the extent of 3.63, 36 lakh 30,000. Am I right, sir? I could not catch your name because you are in front of me, but I couldn't catch your name. I immediately started it. Your name, good name, sir?
Sir,
Naveen Goyal.
Naveen ji, 36 lakh 30,000 will be the index cost. And you are sold for 10 crore. You have to pay tax on 9 crore for 63 lakh at the rate of 20%. And today, if you sell it for 10 crore, you bought it for 5 lakh, 9 crore 95 lakh, you will have to pay tax at 12.5%. What a relief. A non-resident having property in India, selling it, now they don't have to pay tax at 20%. They have to pay tax at 12.5%, of course, without indexation. Of course, without it. Many people who will be stand to gain, and there will be many people who will lose. But those who have taken property earlier, when the prices were very low, and if they get even indexation, that capital gain is going to be a big amount, and they had to pay 20%. Today, they will have to pay only 12.5%. So rich people are going to get benefit. Even for shares, 12.5%. For this also 12.5%. Even for gold jewelry also 12.5%. ठीक है ना? You are now looking for capital, and you are getting the profit or capital gain taxed at 12.5%. I would like to sell my property for full amount of it. No question of any black money. Because whatever money I get, I will take the benefit by paying tax only at 12.5%. So everybody will be interested. And the money, white money has a value. Black money has no value. Black money में तो या आप बिगड़ जाएंगे या आपके बच्चे बिगड़ जाएंगे. White money तो काम आती है. मैं ठीक कह रहा हूँ कि नहीं कह रहा. आपका नाम मैं नहीं पकड़ा. मेरे सामने एक और फेस आया. But what I'm trying to explain is, please pay your taxes in India and enjoy your life. And you also know that now you can transfer $1 million every time if you want abroad. But people are interested in keeping the money in India. अब तो 54 EC लेने को कोई तैयार नहीं होगा. कि sell property 50 lakh के bond ले लो. No question. Pay tax 12.5%. And the money is yours. And put that money in the share. You will multiply that. You will multiply that. So my point is, there are people who are feeling bad, but there are people who are saying that 12.5% is a very good idea, or because you will be able to get every money in what you call white and pay tax 12.5% and enjoy the life. So this is about capital gain, which I wanted to tell you. The indexation has been done away with. But of course, you can take the market value at 1st April 2001 if you have purchased that property before 2001. That point is still there. But after that, there is no indexation. So this is the property value. And let me tell you, in India, well, since you are abroad, you all know that there is a case of deemed resident. Am I right? You people are deemed resident of India if your total income here in India is more than 15 lakhs. You are deemed resident, sir? Deemed resident. Nothing to worry, even if you are deemed resident. Because if there is a deemed resident, the foreign income is taxable only when it is from a business which is carried on in India or a profession which is set up in India. The rest of the income is not taxable in case of not ordinary resident. Am I right? Because deemed resident, it is not ordinary. Even if you are a deemed resident, let me tell you, treaty will prevail. So you can't be the resident of two countries. You have to decide resident of one country by tiebreaker rule. So tiebreaker rule, if you have a more asset there, if you have a more habitual abode there, you are resident of that country. Then you become non-resident of this country. So you have to play with the time, because I'm telling you, the non-resident stand to gain in the case of new law. And the second thing is, if they are investing in India, even if they buy it at a premium, invest at a premium, and startup and everything, now there is no question of any tax to be paid by the company. Apni to company is startup only, so they will not have to pay tax. And if you transfer your share at a high value, what is the problem? Only 12.5%. Only 12.5%, 10 rupee share, 100 rupee share sold for 2,000 rupees. Only 12.5%. Sir, it is beneficial to pay tax, which is a small amount as compared to the income which you are earning. This is another point.
I would say, sir, this is really enlightening, because everywhere, everybody who is cursing that why the indexation has gone away. But when you explained it, it's very simple, that all benefit has gone because it's just 300 times of the original value. And where we see that overall gain is 7.5%.
If the original value is very less, and today the price has gone up, you are paying tax at 12.5%. Otherwise, you are paying 20% even after indexation.
Right.
So better. It is better. It is better, sir. Any other point? Avinash ji, you want me to tell them? Avinash is there or not? Or you want anyone to mute? You want any point to be?
I think let us take some questions, sir.
Ask any question you want.
So there is a rule on TDS. TDS has been simplified, but I just have a question on NRIs. When they're selling their property in India, they have to pay TDS on a presumed income, which is very high amount. So any rescue for them?
Let me tell you, sir, you will be benefited to a great extent if you have if you can fight for the case. Under Section 195 says that you have to deduct tax on the income which is chargeable to tax in India. Right? Now, indexation is not allowed. You have bought the property on 2004. If there is no cost of improvement, you know the cost, and even the buyer will come to know the cost, and you know the sale price. So you may deduct the tax only on the capital gain. You can now. Earlier, the dispute was market value as 2001, then cost of improvement. Cost of improvement, how do they know if there is a cost of improvement or not? How does he know that whatever money have you spent on cost of improvement? So there is a possibility of deducting the tax at 12.5% only if you know how much is the capital gain that person is earning. And you already have a 197 going for a lower rate of tax. That is already there. But now most of the people may deduct tax at 12.5% because They know the cost of your cost. There is no cost of improvement. Very easily they can calculate what is the capital gain earned by you.
Just to add Vijayji here, if you have only cost, then there is an online method which have been prescribed by the income tax department, whereby either as a buyer or as a seller, both the parties, any one of them can apply for a lower withholding certificate.
वो तो मैंने बोला 197 कर सकते हैं.
That lower withholding certificate nowadays, it will be now after this amendment will be very easy. Just submit the documents for your purchase, submit the agreement to sell, and then they will issue this certificate of load reduction easily to you.
This certificate has to apply online or somebody has to visit physically?
No. It nowadays everything is online.
Everything is online.
The best e-system what we can have in India is with the income tax department. No need to go anywhere. All assessments, everything is online.
Fantastic.
Sir, India is gone much high. Let me tell you, India अब India नहीं रहा. India अब बहुत ऊपर चला गया है. और थोड़े दिनों में 5 trillion भी हो जाएगा. So please, you love your country. You whatever you are is all because of your country, India. Am I right or wrong?
Great words. Sir, you want to throw any light on whether NRIs should route their investment through IFSC in GIFT City or they should continue directly to?
तो देखिए वो तो advantages आपको तोड़ने हैं. GIFT City के through करेंगे तो obviously you get the benefit. But too much, how much amount of benefit, that also makes a difference. Obviously, GIFT City is a foreign country in India. GIFT City is a foreign country in India. But you have to, because you are in a country where there is no tax. But if you have been in a country where there is a tax, then whatever tax you have paid in this country, you would get a benefit there. So it depends, It is a country to country varies. For a person who is not paying tax in a foreign country, हमने तो उनको deemed resident बना दिया. लेकिन गिफ्ट टैक्स में तो गिफ्ट सिटी में तो कोई प्रॉब्लम नहीं आना ना, क्योंकि वो इनकम जो आएगी आपके यहाँ भी टैक्स नहीं लेते. अदरवाइज बीइंग ए रेजिडेंट ऑफ दैट कंट्री यू हैव टू पे टैक्स ऑन द फॉरेन इनकम आल्सो. अगर मैं अमेरिका का हूँ तो मेरी डॉटर इज इन अमेरिका, व्हाटएवर इनकम शी अर्न्स हियर शी गेट्स द शी हैज टू पे टैक्स, बट शी हैज टू पे टैक्स देयर आल्सो बिकॉज़ देयर द कांसेप्ट इज ऑन द टोटल इनकम दे हैव टू पे टैक्स. वहां टैक्स ज्यादा है, India में कम है. तो at times it depends country to country. In your case, gift city must be better as compared to other. But otherwise, you want to earn more, you have to invest share in India. Not gift city करें, ये करें, फर्क तो पड़ता ही है.
Sir, I have one question. Anand Raju CA here. So from Riyadh. There is one message, what we have seen in union budget is mentioned as long-term capital gains increased from 10% to 12.5%. So
no, that is only. Tell me, that is only for shares.
Yeah. So other
non-resident investing in unlisted securities in India, the tax was 10%. Now 10% is only up to 22nd July. Thereafter it is 12.5%. Yes, that is there. 12.5.
Yeah. That so other than shares, it is 20% reduced to 12.5. That's what you are saying.
Yes, without indexation.
Okay. Good, sir. This clarity is not given in any of the messages. WhatsApp messages have been circulated such a way that everything
they are
is
not
increased.
interested with the non-resident. They are interested with their residents. That's why. Otherwise, you read the law 112. That in case of non-resident, they have given that up to 28th July 10, it's been raised to 12. Read the law. You will come to know that.
So that means whatever is long-term shares hold until 22nd July will be taxed at 10%.
10%. Now it is 12.5.
No. If they sell after 22nd also, it is.
This is unlisted, sir. Unlisted. That was also without indexation. That was also without indexation. 10% was without indexation.
Okay, without indexation.
Here also without indexation 12.5. For them it has increased to 2.5.
Okay, got it.
Yeah.
Any other questions, sir?
Yeah. Good evening, sir.
Good evening.
Yeah, very nice to see you. Actually, I have referred a lot of books of you.
Thank you, sir. Thank you. Boliye.
Yeah. So my question is, first of all,
I am able. You are able to see me. I am not able to see you, sir.
There is no option actually.
No, sir.
It is not given to you.
Sir, it is a webinar mode.
Okay, tell me.
Yeah, actually, sir, my point is, section 195 again. There is a lot of ambiguity, because if you read the plain section, it says that the tax should be paid on the gains. But when we sell a property
Income
in India,
chargeable to tax in India. Income chargeable to tax.
Exactly. So, but why then they ask for that TDS on the selling price, not on the gain?
I tell you why. I will tell you why. Number one, they don't know your cost. It is quite possible you might have taken before 2001. Now you are assuming market value of 2001, which may not be correct. You may have taken more value. Second, you have done cost of improvement. What is the proof of cost of improvement? So they wanted, on the hold price, we will not put into difficulty. But if now you know your cost and you know your, तभी तो उन्होंने वो दिया है 197 lower rate you can apply. Online you can apply. And now everyone knows if it is cost and there is no indexation and you have sold it, they can deduct on the cost price, provided you have not bought it before 2001. और बाकी तो अविनाश जी ने बताया, you can apply online for lower rate of tax.
Lower rate, yes.
You will be given benefit.
Okay, thank you.
Any other?
Girish sir, namaste. This is Ajay. How are you?
Fine, thank you. Tell you, I'm good.
Some messages I saw that they are saying that the stamp duty and the cost of improvement will not be included for the purpose
this
of.
This is Revenue Secretary has said today. I don't know what kind of a this is. This is the Revenue Secretary has spoken today. I don't think it is a correct one. Reporting.
Yeah, that's what I thought. But I think
it's not a correct reporting. I have also, somebody has also shown me today that Revenue Secretary has said in some program that a cost will not be a cost. I have no knowledge of that. No question.
Okay.
It cannot be a cost if you have claimed deduction under 80C of that registration charges.
Thank you, sir.
So there is one question from Ravi Statli. Is again question on this 12.5% long-term capital gain tax. If someone bought a property for 50 in 2001 and now selling for 160.
He bought it for
50.
Again, 50 lakh.
Yeah, and selling for 160. So
12. Indexation. How much indexation allowed earlier? Tell me.
I think 33% addition only. That's all.
Huh?
Yeah, indexation.
Which year he bought? Which year he's selling?
2001 he purchased.
Then your indexation would be 3.63 times.
Correct.
No property in India which you bought for 50 lakh is being sold for 1.5 crore today. It has gone 10 times, 20 times. This is all wrong. No question. Stamp duty value is much higher. No question of buying at 50 lakh in 2001 and selling at 1.5 crore in 2024. Question does not arise. Not even a village, it is there. Unless there is some other problem.
Yeah, so Girish sir, I agree with you that it must have been 10 times. Now, just a question. I don't know whether that's a right question to ask, but in terms of somebody would have sold just before the budget, they would have got the benefit of indexation, right? So is there any grandfathering?
Sir, I fully agree with you. Property? There may be few persons who may be who may be incurring the loss, benefit not there. But most of the people will make money in it. Because they would not be interested in 54F because they wanted to save tax, and that's why they used to buy another property and then another property. Now they will pay tax at 12.5% and enjoy life and can put it anywhere you like. Having more properties, paying house tax, maintenance thing, and all that was putting you into difficulty to save that capital gain tax for selling one property, buying another property. Now sell one property on capital gain, pay 12.5% and do whatever you feel like. To avoid tax, you were always buying a property. Am I right or not? Sell one property, buy another property, take benefit of 54. There were people doing it not to pay tax.
True, very true.
अब क्या जरूरत है 12.5 दे दो ना, उसकी मेंटेनेंस कॉस्ट पड़ती है सर, उसका हाउस टैक्स पड़ता है, एप्रिसिएशन तो और ही चीजों में हो रही है।
अगर कोई genuine बाई कर रहा है तो बेनिफिट तो लेगा ना सर?
हैं?
अगर genuinely बाई कर रहा है, उसको नीड है दूसरी की।
नहीं, मैं सबकी बात में मानता हूँ। जमीन से जमीन का नहीं मिलता है, वो तो सर एग्रीकल्चर लैंड से एग्रीकल्चर लैंड मिलता है। अगर रेजिडेंशियल बेचे तो रेजिडेंशियल अलाउड है, लेकिन कैपिटल गेन इन्वेस्ट करना पड़ता है। यहाँ तो 12.5% दे दो और उस पैसे को कहीं और लगा लो, एग्जेम्प्ट इनकम में लगा लो, अच्छा रहेगा। सर ये वेरी करता है पर्सन टू पर्सन। आई कैनॉट जनरलाइज दिस स्टेटमेंट। नथिंग कैन बी जनरलाइज्ड। Some are benefited, some are not benefited.
True, sir. Majority is benefiting.
Yeah, Mr. Chandran, your question, please.
Good evening, doctor. I just want to ask you one question on the selling of property by NRIs. What are the precautions they should take it, and how we can avoid the capital gains, and then where we can invest it so that we can reduce the tax benefit?
You can avoid the tax if you have a residential property and you are showing income under house property. You can always, or it can be self-occupied also at times. You are selling that property, you invest the capital gain in the another residential property, you are getting the benefit. You are getting the benefit of 54 that will be given even now today also. Even if the capital gain is more, you will invest that amount, you will get benefit of 54. That is not there. But if you don't want to buy a property, you pay tax 12.5% instead of 20%. Yes, indexation will not be there. But if it is a property which was bought 20 years back or 15 years back, the property prices have gone 10 times in India. So they are going to be benefited because price 10 times, indexation only 3.63 times. Indexation only from 100 to 3.63, whereas property is gone 10 times, 20 times. So you have to decide which one was better. According to me, the new one is better because the price has gone so high.
Yeah, Mr. Ravi Stakli, so you have the open question, or shall we move to the next topic then?
No, Naveen, it's already answered. But this was a
Okay.
real case actually. One of the NRI from UK, he has the same situation which I was mentioning, and he has purchased a property sometime in 2001 in somewhere in Malad, Mumbai, and he has just sold. And he's in India for his registration, and he's assuming that he's not going to pay any tax because he has sold it for 1.6 crore. Now I think he has to pay the tax.
Sir, but let me tell you one point. A property purchased in 2001 for 50 lakh is being sold for 1.5 crore. There must be some 1.6 crore. I don't think that is being sold at stamp duty value. Otherwise, it is much more.
I agree with the Girishji. I bought a property in Malad in 2004 for 40 lakhs. It is now 3.5 crore.
So 9 times. 9 times. How can it be 3 times?
Exactly. And I bought in 2004 and he's talking about 2001. So it must be.
Sir, there are many reasons, sir. Many reasons. I don't want to say for that because either the property may be at a place where some disputed property, maybe some locational problem, maybe some slums there, and they are not able to sell it. That
So
may be a
assume, sir,
different
if it is a genuine case, then you will end up by paying the tax. That's the fact.
Yes.
No?
So everybody
Exactly.
is not going to be benefited.
For whatever
Many
reason,
people
yes.
will be losing. Many people will be
You're
losing.
right. But
That
one
is there.
very
In any case, the
strange
person-
thing was.
No, in any case, the person from UK, even he would have paid saved tax in India, he would have to pay tax in UK. The UK, the tax rate is 28%.
Definitely has to pay tax in UK.
And there is no indexation in UK. You have to pay 28% on house sale.
He's right. He's right.
If you will not get the DTA.
Whatever tax here paid, he gets the benefit there. Otherwise, he has to pay tax more there.
So
You
I
know,
think couple of questions.
you invest in PPF in India. I'm talking about. Interest is exempt in India. Is it exempt in UK? You have to pay tax in UK on that amount.
Yes, exactly.
You are putting the money here in the not you don't pay tax here on the NRI account, NRI deposits. Yes, but don't they pay tax there in foreign country? They have to pay. That is taxable there. So that point is taken that we are giving you exemption. They are not giving exemption on that amount.
The tax rate is also higher.
Tax rate in UK is much higher.
UK, US both will be.
And I think, Dr. there are some questions related to the house property change, more specifically from the real estate developers, because now it has been said that any property which is a residential.
If you have given the residential property or part of the residential property on rent, earlier people were taking it as a business income, saying that we are in the business of letting out of the house property. And there was a judgment of Chennai property also that you can take it under house property if your objects are there. But now that say that we have a specific section 22 for house property. So if you're letting out a residential property, it has been clarified that income from letting out of the house property will be taxable under the house property and not under the business and profession. In house property, you will get only standard deduction 30% or interest on money borrowed. Whereas in business, you could put any expenses and pay tax at a lower rate. That is the point. That is the point which is there.
And so there is another concern which most of the professional has raised, that while people are staying outside India, the NRIs, they have that some partnership arrangement within the firms. Now the partnership withdrawals, there is some change in the taxation laws.
There is no withdrawal in the partnership change. It is a profit share of profit in no way. If you get salary or interest, then only TDS is to be deducted.
But sir, now the current provision says that TDS on any withdrawal, right? Earlier it was on
no, sir. Current provision says that if there is a payment on account of salary, interest, commission, or any or similar nature, the tax will be deducted at source at the time of payment or credit, whichever is earlier. At the time of payment or credit, whichever is earlier. If you take payment earlier, you pay the TDS is deducted. If it is credited at interest is credited at the end of the year, TDS will be deducted at the end of the year.
Right. But in terms of the salary and other dues, so those are being accrued on a monthly basis and are the due. So for all of them, it has to be discharged on a monthly basis.
Sir, let me tell you, income tax is different from partnership deed. You have to specify the salary in the partnership deed. You can't say, I will pay you salary after the end of the year. Partnership deed, you have to quantify. Normally, people quantify as per section 40B. Partnership deed does not talk about income tax. Partnership talks about how much salary, how much interest, how much share of profit. That is the method of distribution of profit. Salary is also a method of distribution of profit. Interest is also a method of distribution of profit from accounting point of view. From accounting point of view. From income tax account point of view, that salary has become taxable under that interest is taxable to its limit. The rest, suppose I give you interest of 18%. How much is taxable under income tax? 12%. Balance 6% is the share of profit. Is the method of distribution of profit. How do you distribute it? But law caught the point that if you are taking salary, we will allow you a certain amount. First 6 lakh, now 90%, balance 60%, and interest only 12%. That becomes taxable in your hand, and rest profit is taxable, not taxable because the firm has paid tax on it.
Right.
When the salary was given, firm has not paid tax. So that's why you are paying tax. When interest was given, that was allowed as deduction. That's why you were paying tax. But as share of profit, this is not an expense. So therefore, you have already paid tax on that. We are not taxing you.
Right. Right. And I think, thank you, sir. It was very enlightening.
Thank you, sir. Thank you. I have been speaking right from the morning, sir. 4 o'clock, I got up, went to Ahmedabad, delivered lecture there. Then there were 2 board meetings, attended that. Then 1.5 hour lecture already given in Gurgaon. And he caught me, please go to come. There is a lecture there. Thank you very much. All the best.
Thank you, sir.
Thank you, sir, for your time, and really
Thank you,
appreciate
sir.
your
Great.
time.
All the best. Thank you. Thank you.
Right. So over to Avinash. Just let's discuss on that other amendment in the provision which has required attention for the all NRIs, or we can just have questions. I think Mr. Chandran has some question around. Mr. Chandran,
sir.
can you unmute yourself?
Yes, I mute myself. Avinash, good evening. One question on the rental income which you was talking about it. If someone, for instance, they have taken a property from, say, A, and then he is letting out like under Airbnb or booking.com or something like that on a monthly daily rentals or weekly rentals or something like that, whether that income, whatever is claiming, it has to be considered under business income or under rental income?
Sir, as far as this residential house property is concerned, when we are not running this property as a hotel, then till that time this property is taxable as a house property income only. Whether you let this property for 1 day, 1 week, 15 days, it is an house property income only. But if you are in the process of taking all the licenses in your name as a hotel property or as a property for this, then yes, you may claim it as a business income as well. So both depend on the actual circumstance. So for example, in some states in India, you cannot let out your house on Airbnb, etc., until you take a license from the municipality. So if you have taken that license to run it and give it your property on rent for like this, then yes, it may be classified as a business income. Otherwise, it will be a rental income from house property only, and you will be given only 30% deduction. And that also depends how frequently you do it. If you do that letting out for entire 365 days, then yes, I may say that that property is meant for letting out as a hotel, as a Airbnb, then you can claim it as a business. But if you are letting out only, let's say 1 month, 30 days in a year or so, only in exceptional cases, then of course that will be a house property. Yeah, any other question? I think Naveenji, I just want to answer a few questions which are there on the Q&A box. So I think there are a few good questions which are there. So I think Vijay Soniji about NRI I have already answered. Then there is one question of Mr. Shubham, who have asked me, can I get the tax deduction in India on the dependent fee which I paid in Saudi Arabia as per DTA signed between Saudi and India? Friend, I think answer is no, because please understand what is the benefit given in the DTA. So there are 2 benefits in any DTA which have been given. So as a non-resident, I can get the benefit in the country to lower my withholding tax rate. So for example, the withholding tax on the dividends in my domestic law is 20% in India. So whenever you are investing in the shares in India, the company, when they are giving dividend to you, they will withhold 20%. However, when we see the India-Saudi DTA or any other DTA, normally the rate was 10%, meaning thereby that under the DTA between India and Saudi Arabia, you are liable to pay only 10% tax on your dividend income. However, domestic law is 20%. So it is a benefit which have been extended by India, that instead of 20, they will deduct 10%, provided you fulfill all the condition, you give the TRC, you give the 10F form, etc. Similarly, it is the other way around also. So any Indian resident who is earning income from a Saudi company by way of a dividend, in Saudi there is no tax on dividend, so there is a 0%. But there is a withholding tax which is there in Saudi Arabia whenever a dividend is being given to an outside person. So that withholding tax, I don't know how much is withholding tax as on date, because I have not seen, but if it is, let's say 15%.
5%. 5% dividends.
15%. So 5% doesn't matter, because India, Saudi treaty is already 10%. If there is a domestic law of 5%, there is no benefit. Let's say if it is 15%, then it will be reduced from 15% to 10%. The best example is fee for technical services. So whenever a services is being provided from India to Saudi Arabia, there is a withholding tax prescribed 5%, or in the related party it is 15%, and in some cases it's 20%. But the India-Saudi treaty have 0% withholding. So Indians will be benefited if they submit their required form Q7B along with the TRC, etc. from India. So the benefit to a non-resident of the treaty is only towards the rate of tax. But the credit of tax has to be given by the home country. So if you are having a dependent fees, meaning thereby you are staying in Saudi Arabia, meaning thereby you are a tax resident of Saudi Arabia, then whatever taxes paid in Saudi Arabia, whatever fees that you pay to Saudi Arabia, India is not going to give any benefit of. So there is no provision either in the treaty or in the domestic law whereby we can give this benefit to anybody. So that's how this treaty is being designed, and I think Riyadh chapter have planned a follow-up series of meetings on this thing. So in one of the meetings we can discuss about specific about the treaty between India and Saudi Arabia. Detailed version we can discuss one by one. So that's there. So
Right.
Can we move next, sir?
Yes, so I think there are some questions related to the lower TDS, that if flat is purchased in the joint name, lower TDS certificate should be for both name, or name can be manageable to claim on the both buyers. So
I think Mr. Deepak have asked this question from Kenya. So he's the past chairman of Kenya. He have asked me. So sir, whenever we are applying a lower withholding certificate, that is always given in the name of the person who is being benefited out of. So if there are two owners, both have to apply separately, and both person will get their lower withholding separately. So that is there. So in a lower withholding, the buyer can do it, the seller can do it. If the seller is 1 and buyer is 2, then one can get it. But if the seller is 2, because ultimately benefit is given to the seller, then you have to apply 2 certificates for that. So that's how the rule is. Next, can we move next, sir?
yes, so I think there is a question related to that old tax rate apply in the realized gain loss on equity during 24-25. So it seems predominantly the question is related to the applicability date of the change in the provision.
So the change of this 12.5% from 20% is applicable for all the transfers which took place on 23rd of July 2024 and onwards. So if somebody has sold the property registered on 20th July, that is governed by the earlier law of 20%, as well as the earlier indexation is allowed. But if you have done it on 23rd of July or later, then it is at 12.5% without indexation.
So date of registration is important here.
Yes, sir. It is very important because it is applicable for everything. So if Mr. Soni, you have invested in Indian markets and short-term capital gain, long-term capital gain, then that is taxable before 23rd of July. It is taxable at 15% and 10%. And there is one more good news for you. That earlier, if you are earning a long-term capital gain up to ₹1 lakh, then there is no tax. That limit of 1 lakh have also been increased to 1,25,000. So suppose you earn a capital gain of 6 lakh rupees. Now, out of 6 lakh, 1,25,000 is exempt. On the remaining amount of 4,75,000, you are liable to pay only 12.5%.
So Avinash, if we can clarify on this part, so this exemption of 1 lakh or 1,25,000, it is in relation to the capital gains category wise or consolidated?
No, aggregate long-term capital gain earned from listed securities under 112A, not for any other, only from the listed securities. Yeah, listed securities.
Right. And there was one question from Mr. Deepak. TDS on dividend on equity is deducted 20%. It is difficult to submit tax residency certificate to every company if you hold shares with the large number of companies. So how they can take the benefit of the DTA?
Sir, that benefit is not available. You have to submit your TRC and other things to every company. Otherwise, sir, now India is very advanced. You file a return, and within 7 to 15 days, you will get the refund back in your bank account. So file the return and get the refund easily, or everything online. And I can tell you, sir, I filed my return today, and tomorrow morning I get refund in my bank. So that fast India is now. Again, it depends on how much refund you want. So if it is within the reasonable limit, so then yes, they are processing the returns within 24 hours, within 48 hours, and then giving the refund also. But if you claim a huge refund of 10 lakhs, 20 lakhs, 30 lakhs, then they will verify.
So moving further, I think the questions are related to Mr. Giri. Both has been answered in the earlier session. So Avinash, there is one question related to now the cryptocurrency. The question is that how the cryptocurrency taxability is there. So is it on the trading or it in the realization time?
Sorry, they are asking about India or they are asking about Saudi?
So the question is generic. It says that I want to ask about the crypto benefits. Is the trading also attract tax or it's attract only which we withdraw only in our account?
Sir, if it is with respect to a person, an individual who is resident in India, the answer is yes. The trading as well as realization both attract tax. The only question is whether it is a capital gain tax or a business tax. So whether it will be categorized as capital gain or it is categorized as business. Because if it is categorized as business, and crypto is basically a virtual digital assets in India, and that is being sold and given without delivery, then it will be a speculative business gain or speculative business loss, liable to be taxed at the normal rate of slab rate, whatever applicable to the SSC. But crypto is not regarded as a capital asset under the Income Tax Act. So hence, in most of the times, it will be deemed to be a business tax, and business that too as a speculative tax. And there are other complications also. Legality of trading, whether it is legally allowed or not, that's again one can check before getting into these transactions. If he is resident, if the person is a non-resident NRI, then it depends on the laws of the country where you are resident. If you are in UAE, no tax. If you are in Saudi, I don't know as of now. Navinji will tell us whether there will be a tax on that or not.
So far, no tax.
So far, no tax. So, but we are hearing that certain things will get clarified. But as of now, if we see from a zakat point of view, they say that if you earn any income which you have received from a source other than salary, and that is coming from your activity, be it investment or anything, then it should be liable to zakat. That provision includes for the foreign residents as well. So that's the one point where our members or the NRI community is currently not taking into the consideration, but it is subject to the zakat. The another question is from Mr. Raghunathan, and his question is related to the house property which we have discussed. So that if the ground floor is the shops and the first floor is the residential. To answer that question, it more related to the classification of the property.
Sir, whether it is shop in a mall, shop in a property, own property, whatever it is, sir, house property does not distinguish between residential and non-residential. All kind of properties are classified under house property. It is a name is house property, but that does not mean house. Even if you have a property in a mall, if you have a property in a business center, if you have a property which is a commercial property, that also will be dealt under the chapter house property after 30% deduction, after the payment of taking the benefit of the taxes and interest board, whatever left is to be taxed.
So I think Avinash over here probably I'm just asking the question on behalf of the other members. I'm sure this question would come. That when you say that house property is defined, so the purpose of uses is residential and commercial is irrelevant in your view?
No, sir. The law says house property means any land and building appurtenant to it. So कोई भी land जिसके ऊपर कोई भी building बनी हुई है वो house property है. That might be a farmhouse, that might be a normal house, that may be a commercial property, that may be a property in a business complex, that may be a property given to a bank for an ATM, whatever way it is. A house property is a property. Unfortunately, the name used is house property. It should be a property. So residential, commercial, everything is a house property.
And is being covered under the new provision. So now it is not going to be more of the business and profession, right? Thank you.
Oh, yeah.
And I think the next question was related to the NRIs to file the return that has been discussed. And so the another question, sorry, what was the make it benefit from the treaty between the what form was it to make benefit of the treaty between India and the KSA? I think, Mr. Basim, the question is not clear. If you have anything specific, you can just let us know.
No. I think he's asking at what form. Sir, if you want to take a benefit of India-Saudi treaty in India, then you need to obtain a tax residency certificate from Saudi Arabia. Plus, there is a Form 10F, which have been prescribed under Indian Income Tax Act. Now it is again online. So just need to fill out your information about yourself in the 10F form, which is to be filed online. And after giving that form, tax residency certificate and Form 10F, then you can take the benefit of the treaty between India, Saudi Arabia in India. If somebody want to take the benefit of the treaty in Saudi Arabia, then you need to obtain a tax residency certificate from India Income Tax Department, and you also required to fill up a Form Q7B, which is to be countersigned by the Indian tax authorities. That is the rule, and then you submit it to the person who is withholding your tax or to the Jeddah authorities of Saudi Arabia, and you can take the benefit of the treaty.
Right. So moving further, I think the tax returns, we have discussed that. And can NRI buy an agriculture land?
Legally, under the FEMA law, an NRI cannot buy a new agriculture land. However, he can inherit an agriculture land. If he have inherited the agriculture land, he can retain that land for his life, and that may be further inherited by another person. But as an NRI, I cannot buy a new agriculture land.
Right. Thank you, Avinash. And there was a question related to the CSR. Are there any changes in the CSR activities in the budget?
No, sir, there is no changes in the CSR activities. Whatever you spend on CSR, that is disallowed.
Right. So there was one question relating to the RBNRO status and the crypto asset taxation. So I don't think so there is any difference or a specific provision for crypto under RNOR and the NR resident.
No,
so it will be same as the rule which is applicable, right? And so I think Mr. Shivaraman Sundran has asked a question. One of the client has got 5 shops in the shopping complex but does not earn any income because it is lying vacant. Municipal taxes claimed but not paid. In circumstances, it is subject to the income tax also based on the deemed annual value. Probably the answer is yes, right?
No, sir.
The vacant house property.
Do you also get vacancy allowance?
No. Yeah. So normally, whenever you have a house property, you have a deemed let out income that is there. But if the property is being advertised to be let out, but there is no person who is coming to let out that property, then yes, the vacancy allowance is there and he is not required to pay any tax. Yes, there is a concept of deemed annual lettable value.
I think the last question which we have as of now in the chat is, my brother who is now citizen of Australia wants to sell his property in India and transfer the proceeds to Australia. Can he do so per the FEMA, and how taxation is applicable?
Okay. So it's a very good question, and most of the NRIs have this problem and this question. It have 2 parts. One is how he can repatriate the money, and second part is how the taxation works. So taxation, I think we are all clear about it. So whatever is the sale value minus whatever is the purchase value, if it is after 1/4/2001 or if it is before 1/4/2001, then we need to do a fair valuation on that date, and whatever is the difference is liable to be taxed at 12.5%. That is how the taxation works. So 12.5% plus surcharge plus education cess, which may come to be 15-16%. I don't know, it depends on the value. If it is less than 50 lakhs, more than 50 lakhs, more than 1 crore, more than 2 crore, more than 5 crore. So that we need to add on as a surcharge. Now the important question comes is how he can repatriate. So normally the NRIs are very confused. So can they repatriate up to $2.5 lakh? Or they are allowed to repatriate $1 million, what Girish ji have just told us before. Because as an NRI, I am allowed to withdraw money, take out money from India up to the extent of $1 million. Then there is a concept, there is one more problem for the NRIs, what they face. Many banks ask them to collect TCS on that part also. So under the FEMA, there is a rule that whenever a non-resident, and it's not for non-resident Indian, it is for all non-residents, if when they sell any property in India, from the sale of that property, whatever is the proceed, whether it is 1 million, 5 million, 10 million, $200 million, the entire proceeds can be repatriated outside India, provided you prove that this money is from the sale. And there is a specific provision under the FEMA where sale of immovable properties which he have acquired or inherited, that sale proceeds can be transferred abroad. If not, if you don't want to take the benefit of that particular provision, then $1 million scheme is always there. Up to $1 million, he can repatriate the money anywhere without any TCS as well. In both the situations, there is no TCS to be collected. But few banks in India which don't know these provisions might be imposing this. So you should be aware that there is no TCS on that. 1 million you can take out anywhere, anytime, without any hindrance. But for sale of properties, even more than 1 million can also be repatriated in one go.
Right. Thanks, Avinash, on that. I think the question of Sajad Ali regarding that indexation that has already been discussed, that 1979 he acquired. Now there is no further indexation which is available. And I think the last question which we can take is, what are the investment could made through the gift to benefit for NRIs? Is there for mutual fund or stock investments?
I think, sir, personally speaking, I don't think that there is any benefit which is available to you, because in Saudi Arabia, if your income is exempt, the same exemption you will get it through the gift city as well. And gift city is created to make investment outside India. So if you are making investment, let's say in Singapore Stock Exchange, if you are making investment in London Stock Exchange, US Stock Exchange, so that exemption is there. However, we can have a full-fledged session with somebody who is expert of gift, and how this can be benefited to them. Yes, gift is coming a lot of benefit. Best benefit what you can have is you're having an account in a bank situated in a gift city. There is no exchange regulations which are applicable. So today you send 100 million to that account, and tomorrow you can withdraw that 100 million without any limit. Many NRIs have foreign companies. So for example, I am staying in Dubai. I have a company in Dubai. I also have a company in Saudi Arabia. For Saudi Arabia company as well as for Dubai company, I can open a bank account in the name of company in gift city. So no exchange regulations. So I can take money from London, I can take money from others, and that is many people are using it. So for example, Russian money is not coming to Middle East, but there is no restriction in India. The money from Iran, those who are doing trading with Iran, so this money is also coming to India. So those money can be brought in through opening of bank accounts of the foreign companies in gift city, and the business can be benefited out of it. So there are things which can be done. Yes, Vijayji.
One question on gift city, whether an individual can also open their bank account in gift city?
Yes, sir. Yes, sir. This is allowed. I just opened my account in gift city 2 months back.
I'm just talking for, Saudi Arabia, most of our audience are employed one. So as an employed one, you're not allowed to have any other receipt other than your salaries. But some of people are having other incomes. So in that case, they are worried, where to get this proceed. Either they try to take to NRI account in India, or they try to open some account in Dubai. I told better let them open in gift city and transfer that money directly to gift city. That's
yes,
good.
This is allowed. This is allowed. And all Indian banks, whether it is HDFC, whether it is State Bank of India, whether it is ICAI Bank, whether it is Kotak Mahindra Bank, whether it is Bank of Baroda, Central Bank, wherever you have a banking relationship, you can open. All banks are available in gift city now.
Fantastic.
Right. So I think the last question of Avinash we have in the chat again, which probably the answer is clear, that what is the inheritance of the property? Is it through the gift or inheritance? It has to be as in legal here, the receipt of the property.
Sir, frankly, under the FEMA law, inheritance means either by way of a will or on the death of the person.
Being a legal hire.
Gift is not inheritance.
Gifted.
So if I have a agricultural land and I am a resident and Naveen ji is my brother, I cannot gift agricultural land to him. But in my will, I can transfer it to him. And that land may be transferred to him after my death by way of execution of a will. That is possible under FEMA.
So one question again on the same GIFT City. We know that a lot of people are opening accounts in free zones in UAE or other elsewhere as because of certain issues. So is it better to go there or is it better to go to GIFT City looking from a regulatory point of view?
Sir, as an Indian, I always promote India. And I believe India being a democratic country, your money in India is safe. And the inheritance of money is also safe. In UAE, there are problems of the Sharia law. Even if you are opened your accounts, offshore accounts in free zones, still they are covered by Sharia law. And the will part, if somebody challenges the will, and specifically for those who are Muslims, UAE courts are treating them under Sharia. Because the person who is challenging the will, and they say that we don't want to go with the will, we want to go with the Sharia law, and courts are accepting it. Recently, after I think 2.5 years ago, that Dubai has started a new vehicle which is called Family Foundation. That Family Foundation is there in DIFC, in ADGM and RAC ICC, which says that if you create that family foundation, then Sharia is not applicable, but it is still to be tested because there is no litigation. It is only 2.5, 3 years old baby.
So face of it looks better to option to be GIFT City than UAE.
Of course.
Then one more clarity. Once you become resident in India, then you have to move back your funds from GIFT City to India. How easy it is?
No, it is just a click of mouse. Click of mouse. No problem at all.
Yeah, I think we'll take that one question from
something regarding the GIFT City?
Yeah, please.
So basically, Mr. Vijay, as you mentioned, I just want to clarify you. In GIFT City, you have two options. One is you invest as an Indian investor, or you can invest as an NRI investor. When you invest as an Indian investor, you are using your NRO or NRE funds, then it is an Indian fund. But when you invest as a foreign investor, then you have a USD account, your repatriation, etc., everything is in USD. So technically, even if you move to India, that will still remain as a USD money. So the benefit you get is twofold. One is it's tax-free. Second, your income is getting in USD, so you get a USD markup plus the normal markup which GIFT City is providing you. And last question, somebody said, is it beneficial foreign versus GIFT City? At the moment, like, see, I have invested in both. I'm investing in Mauritius banks and also in GIFT City. GIFT City is giving on an average around 1.3% return monthly. It promises around 40%, but on an average, on realistic returns is between 1.3 to 1.5%. Whereas Mauritius banks are giving me more. It's giving me around 3% return monthly basis. Thank you.
I think a small correction here, sir. Till the time you are non-resident, what you said is absolutely correct. There is no problem in it. The moment you become resident in India under the FEMA law, the government has clearly mentioned that within the 6 months of your becoming a resident, all money in all foreign bank accounts, including the bank account in GIFT, needs to be repatriated back to India. So you cannot hold any money outside India for a period exceeding 6 months the moment you become resident. And you have to declare all your accounts, all your money in your income tax returns in India because you are a resident in India. The moment you become resident in India. Till the time you are not resident, you can enjoy that.
I partly agree with you, sir. What happens is I have exited and come to India for 2 years before also. That time also I had checked with my chartered accountant, etc. They give you you a time period of around 7 years. So basically, if you have overstayed like 365 days, like, like I stayed for 2 years, then I came back for work abroad again. So if within the block of 4 years, you do not commit to that and you are again back to work, then it's allowed. You can still
Sir,
keep your NRE accounts,
that
etc. for
must
coming
be
7 years. Sir.
that must be before 31st March 2022 itself. Now the laws have changed.
So
Okay,
one
maybe.
question here, certain deposits you are having certain maturities, then you're forced to bring in 6 months. You are going to lose there is no relaxation for that.
No, sir, there was a huge hue and cry from Indian citizens stating that at least allow us to put minimum balance. So there is a minimum balance which is required to be in account outside India. Even the government have not allowing us to put that minimum balance in the account.
I think this needs to be looked into.
No, sir, actually why they have done it, there is a logic behind it. Sir, there are many Indians who are resident as of now. They open bank accounts abroad because our FEMA law allows them to open a bank account abroad, and they are slowly repatriating the money outside India up to the extent of $250,000 per annum. And these people are going, and we all know every day we are hearing that people are moving out, people are relinquishing their Indian citizenship and all these things, and high net individuals, HNIs, are moving out. So to curb that particular situation, the government have come up with this rule in, I think in September 2023 or maybe July 23, they have come up with these rules whereby they said that now more than 6 months you cannot put any money outside India. You have to repatriate it back. Otherwise, there will be a penal consequences under the FEMA law.
Okay, they're talking about only money, but other property you can keep.
Yeah, other property is okay. In the bank account, you can have a house, you can have a office, you can have everything. Only the bank account you cannot have a money. You have to repatriate it back. You can have mutual fund, you can have shares. That is not at all a problem.
With this, I would like to extend thanks to Avinash and Dr. Girish, who was already left, and all the other members who has participated. So if there are any further queries in the future, we'll be more than happy to take. And I just requested our coordinator, the admin coordinator, if we can allow the cameras to be switched on by the all members so that at least we can have a group photograph of the all members who have joined. And it was really good, the audience, and that we had a lot of questions. I hope we are able to clarify the most. And what we have done, the recording of this session. So we will be sharing the recording of this session with all registered IDs. And we will also make this recording available for the session for the future reference on the website through the YouTube channel. And we will share that link, which you can further share with your other friends and colleagues who, because of some commitments or non-availability, could not join the session. And really appreciate and thanks to all of the members joining us. And I'm sure that there are so many things which has been clarified in this small session, which was becoming as a nightmare to all of us because of the lack of awareness. I would say that indexation, capital gain, the way Dr. Girish has explained, it is really eye-opener. And I would say that in some of the areas, even my clarity of thought has been more in that areas now. And I'm sure that all the provisions, as the way the media is publicizing and the people are talking, that it is not beneficial to the members. If we look into the totality, this is not the case. And of course, all of the steps cannot be in the positive side. Some of the steps which will give you a negative, some of the steps which will give to a positive. But if we see from an overall point of view, as Dr. Girish Ojaji has mentioned, that it is to curb the capital gain, the lower taxation will help the accumulation of white money more rather than moving the black money sides. And the provision which has been covered on the tax clearance certificate is also to curb the black money, because now the people has to provide the certificates. As we need to go along with, there are more clarifications and more amendments to the draft budget proposals will come through the Finance Act. And as we already announced that from the Riyadh chapter and the other associated KSA chapters will also participate. I'm committing on their behalf that we are committed to raise the NRIs text series, and we will be sooner raising the calendar over there, and we can have that more detailed discussions on the topic wise. And if there are any suggestions and topics which has been picked up from you guys, we'll be more than happy, be it the FEMA, stock market, real estate investments, all those been taken care, and we'll just try to help each other. And as we discussed more, the thoughts comes more clear, and it will be beneficial to that. And I will share, as we said, that we will share the further contact details through the email. And Avinash, if you can put request, if you can put the contact details in the chat as well. So if any of the participants have the immediate questions, they can share it with us. And I am committing on your behalf that please try to answer them as soon as possible to the best extent. And of course, if there is certain thing which require a detailed deep dive, and discussions can be done. And with this, I would like to request Vijayji to give a vote of thanks, and then I'll probably share the certificates on the screen as well.
Sir, I have just mentioned my India number and email ID, so anybody can write a mail to me or send a message, or otherwise Naveenji is our connecting point, so anybody can contact Naveenji and we can be there. And now we'll be coming more to KSA than India. So we'll see you. If you have anything, we can meet in person as well.
Right. Thank you. Thank you, Avinash, for confirming your availability. And I'm sure that members will take a benefit, and we'll keep you bothering on all those things. Yeah.
Thank you,
over to Vijay,
for making this very complex subject is a very easy journey. All of today, 2 hours we sit together. There were so many observations which has clarified all of our audience. I'm sure everybody has gained this discussion. Ahuja ji was just came in between, and he just, like, he's always, Wikipedia of taxation. You ask anything, he simplify in a very simple way. It's fantastic. Manusmriti ji also has given very good broader view what's happening on budgetary allocations, and this budget is taking us forward. Amit, you have very well convened this event, and very positive steps by you and team. And lastly but not least, all the audience who are still sitting after office hours. Although this weekend starts, but I think the weekend is going to start now. But I'm sure some of their questions have eased. Look forward to see you again. Thank you very much. Jai Hind.
Yes, and I would like to request participants to see the screen. I'm just sharing my screen. This is just a token of the appreciation, the hard work which goes behind, and the certificate from the Riyadh chapter. This goes to Dr. Girish Ahuja, and will ensure that it has been delivered to him. And that the next one. And this is for Mr. Avinash. For your contribution, we'll ensure that this has been sent to you over the email as well. And this goes for Mrs. Manusmriti, and we'll share for her. And Vijayji, for your all contribution and that all support which has been provided. And of course, the last goes to me as being a moderator of the session.
This one is very good.
Right. And thank you very much, all of you again. And the participants who are available, just try if you can switch on your camera. I requested the admin to do that, so that at least we can click the group photos of the.
No, I think Naveenji, this is not possible because it is a webinar mode, not the meeting mode.
Okay, right. So thanks again once all the members. It was really, as Soniji has said, that spending the time in the evening, that too in the beginning of the weekend, Thursday, we know it's all the family time, office time. And thanks for all of your participation. And I could see that more than 50% participants are still with us. 73 participants who are still with us out of the more than 150 joined during the session. And thank you very much once again, Avinash and participants. And hope to see you all in the upcoming seminar in the web series.
Very soon.
Thank you.